to write the roll numbers again?
Yes, for the second period, write again. So we were here that R is greater than K, and I ask you a question. I hope you must have applied your mind. So before I explain to you or seek your, answers for that, uh, let us continue, or maybe towards the end I may ask you. So one firm we have already discussed, and you see what is the effect. You have seen that effect. So as I told you before, that Walter has classified the firms into three categories. One you have seen. Now we go to the second category of firm. And what is that second category of the firm? Where R is lesser than KE, declining firms. So what is the declining firm? Where R is less than K. For example, if we look at here, what is R? 8 and K is 10. K is 10. So these firms will be known as declining firms. What you are now expected to do, I'll do it for the normal firm also, and then we will start the discussion. Using the formula that has been provided to you in the previous table, this one. Have you taken a copy or have you taken a photograph of this slide? If not, take the photo of this slide and then come to, have you taken or shall I stay here?
Sir, taken.
Take the photograph. Once you have taken the photograph, then come to this slide, that is using this data 20, 40, 60, 80 and 100, assuming that EPS is 10. EPS is equal to rupees 10 and R is 8, K is 10. Oh, EPS I already wrote here. EPS is equal to 10, that is already written. So work out DPS, work out value of P. Work out the price of share, which I am underlining. Price of shares when dividend payout ratios are 20, 40, 60, 80 and 100. And post your answers on the private number. Not in the group nor in chat box. Just post your answers just like you did for the growing firms. Once again, work out the value of P with this data and post it in the cell phone. Am I clear to all of you?
Yes, sir.
Work out and then post. So those of you who have just now joined, just write your roll number in the chat box. Are you working out? I have just received only one answer. Just try to work out and then post it. I'll, you know, start with this one immediately. It should not take that long. Try to post so that I can proceed. Out of 47, a few 46 of you present here, I have just received 3 answers. Okay, let me go now. These are your dividend payout ratios. And what are the price? Although I have it in the messages we have sent, but can some of you tell me what is the price at 20%?
So 84.
84. Then
88.
okay, just one second. 84 80. What is happening? 84, then 88,
So then
92,
92,
2, then
96,
96,
96, and
100.
100.
100. These are all rupees, correct? And earlier or percentage. These are dividend payout ratios, and these are. Now look at the trend. What does the trend suggest?
So that the value of P is increasing as we are increasing the TPR.
Okay, there is a positive
Directly
correlation
proportional.
between DPR
Yes, sir.
and price. Higher
Yes, sir.
the DPR,
Higher will be the value of P.
higher will be the value of P. Look at this slide. Higher the value of DPR, lower the value of P. So in case of a growing firm, the statement is higher is the DPR, lower will be the present the value of P. In case of declining firms, what is the observation? Higher
There's a
is the
direct relation between DPR and
Direct
price.
relation.
good. So what should be the recommendation here from Walter's model?
But that DPR should be high.
DPR should be high. Only then the share price can be higher.
High, sir.
The question, okay. I mean, is this clear as per the formula?
Yes, sir.
Anyone having any confusion? Anyone wishes to know any answer? Wishes to know any clarification up to this stage? All right. I'll assume if you are not asking any clarification, that calculations are clear and interpretation is also clear. Interpretation based on Walter's formula, not the one that I asked before, taking a break. Now look at the normal firms. What are the normal firms?
And R is equals to Q.
Where R is equal to K. Assume that EPS is again 10. EPS is rupees at 10. Once again work out P when dividend payout ratio is same. That is same percentage. That is 20/80, and once again post it privately. Once it is posted, we will start our discussion. Normal firms. So this will be your third posting. For normal firm, K is equal to 10% and R also is 10%. What will be the value of P at varying? Yes, Shariat has posted. Let there be one or two more posting. In fact, each one of you are supposed to post. Yes, under all, you all have started posting. I'm seeing several answers, but each one of you is supposed to be posting. Now let me tell you that under all dividend payout ratio, let it be 20%, 1%, 100%. The value of P is what you have worked out is rupees 100, and you have correctly worked it out. So the calculation part is over now. You have calculated for normal firms, declining firms, and growing firms. What you do next, just have this type of table, make a table in your answer book like this. 1, 2, 3, 4, 5 columns, and 1, 2, 3, 4, 5 rows. 5 rows and 5 columns. Just in your answer book, in your copy that you are carrying with you, make a table like this and fill in the blanks. Draw a table. Take your time, maybe 2-3 minutes. Take out your answer book. Draw a table like this and fill in the blanks. You all can fill in the blanks because you all have the data that you have supplied to me. Out of 49 of you, only 39 have posted so far. Anyhow, it is your choice, but unless you do it yourself, there are issues which crop up later. Look at prepare the table which is appearing on your screen and fill in the blank. Once ready, let me know so that I continue. You all have posted me the answers. So based on the answer that you have posted, prepare a table like you see on the screen and fill in the blanks. Need to know anything or you are working out? If you need to know anything, let me know.
Sir, in the recommendations column, do we have to specify for?
Leave the recommendation column.
Okay, sir.
Just
Okay, sir.
fill in these columns wherein you write a value of P.
Okay, sir. Okay, sir. Got it, sir. Thank you.
Against 20% right value of P, then 40%, 60%, 80% for all the firms. You already have data with you. You need to put in the table. Your tables are ready?
Yes, sir.
Yes, sir.
Okay. Once the table are ready, take a photograph of this table and once again post me. Take a photograph of this table and post me. The figure that we have completed, I'm writing take photo of completed table and post at my number. Post at my number. Let me check. 140, 30, 10 correct, 100, 84, 88, 92, 96, 100 correct. So the figures that I am getting from most of you are correct. I'll just wait for just a minute or so. Let me receive some more answers. No, Yashasvi, you have not posted it in the form of a table. Post it in the form of a table that I am sharing with you. Yashasvi, am I audible to you? You have not posted it in the form table.
Okay, sir, I'll resend again.
Post in the form of a table. Once the table is evident, only then the discussion will make some sense to all of you. In the absence of that, it will be difficult. I hope you're all working on the table. Fine. And I hope you will, if not now, you will do it in a minute or two. Let me start the discussion. Shall I begin the discussion?
Yes, sir.
Or are there some people who need time? Okay. At the end of, once your work is over, your table will look like this. When you see your table, does it match with the one that is appearing on the screen?
Yes, sir.
It does. It should naturally, because you yourselves have worked out. I have also worked out when data is same, so naturally there may be no variation. The answer of all of us would be the same. Now look at the table very carefully. What is happening in case of a growing firm? It is declining. I am moving cursor. It is declining. What is happening in case of a normal firm? Neither it is declining nor it is increasing. What is happening in a declining firm? 100, 96, 92, 88 and 84. In case of declining, share prices is also declining. In case of a growing, higher the dividend payout ratio, lower is the price. So when you look at
Declining one.
Sir, it is written for the 20% R is less than K 100. So it should be 84 now.
Say it again. I'm not getting which percentage you are saying.
Sir, where R is less than K declining.
Okay, here.
So you have written 20%, the value is 100.
It is 84.
Okay,
It is
84.
wrong out to be
It is 8. No, it cannot be 84. It will be something else.
आपने डिक्लाइनिंग के लिए अपसाइड डाउन कर दिया है टेबल लाइक
So
100
opposite
के
of
लिए
that.
100
Okay,
20 के लिए
it should be like this.
84, 88, 92, 96, 100.
84. Say it again. 88,
88, 92,
92,
96, 100.
96, 100. Correct. Thank you. This is the correct version. Sorry, 100. If we look at two extremes, growing and declining, we see opposite trend. Am I right?
Yes, sir.
Yes, yes, sir.
84, 88, 92, 100. If we see normal, there is no difference. It can be 0, it can be 100. Even at 0, the price will remain 100. Even at 100%, price will remain 100. Now, look at the, once again, go to the place where we started our discussion from. That is, dividend should be paid or should not be paid. So we assume that let us pay. Now paid, how much to pay? Now how much to pay according to Walter or relevance? They have divided the firms into 3. So for each firm, their recommendation is different. So for growing firms, what is the recommendation? Should it pay more or should it pay less?
Less.
Pay less.
And for declining, it should pay
more.
More.
for normal.
So it does not affect.
It does not matter. It pays or it does not pay. It hardly matters. By the way, when it hardly matters, what should it do? Pay or should not pay?
Should not pay.
Shouldn't
It
pay.
should not pay, sir.
Should not pay.
It should not pay.
So can be.
Okay. Once again, the real answer should lie when you answer it as if either you are manager of this company in ultimate decision or you are shareholder in this company as an equity holder. So you answer it from the view of shareholder in this company. Your firm will be middle category firms, that is normal. What would you like to this company to behave? Should it pay or it should not? You are.
But it should pay.
It should
And
pay.
it should pay. Yes, sir.
It should pay. Now, the people did not pay. Is it who should pay? All right. Suppose you are not investor in this company, you are shareholder in a growing firm. What is your what would you like this firm to do as a shareholder? You are shareholder in a growing company. As an investor, as a shareholder, what would you like manager of this company to do? Pay or should not pay?
To
Should
pay
pay.
more dividends. Dividend.
No, let at least one of you answer. Should pay or should not pay?
Sir, it should pay.
Fine. How much?
Sir, it should not pay.
Should be less now.
No, just 1 second. Let only one of you answer, then another one can come up. Yes, Apa, it should pay or should not?
Sir, it should not.
It should not. Anyone else who says it should pay? Some problem with the mirror. Anyway, can you see the screen also?
Yes, sir.
Yes, sir.
Screen is clearly visible?
Yes, sir.
Okay, fine. So anyone who says the company should pay, let me tell you, right now 48 of you are present. There can be as many as 48 answers, and each answer can be correct. With this clue, tell me at least one correct answer with logic. And your answer is correct. You have already was, and
Yeah.
if as an individual, as a shareholder, you are unable to answer, that means that something wrong in understanding.
Sir, can you
should
please
say-
repeat?
As a shareholder, yes, go ahead, repeat. You what have you assumed? Which firm are you a shareholder in? Correct. We are discussing growing firm. So you want the dividend to be paid. Am I right? Correct. How much? We have given a range. How much? Should it be 20% or 100%? Or any range?
So there can be multiple perspectives.
There can be.
So multiple opinions as a
Fine.
shareholder also.
You are right. I'm only interested in knowing your opinion and your logic of your opinion.
तो मेरा ओपिनियन तो ये रहेगा सर 60% पे आउट ले लूँ मैं और जो 20 रुपीज का प्रॉफिट बचेगा वो रीइन्वेस्ट
कितना
करके
60%? कितना परसेंट होना चाहिए?
60% that will be 120
चलिए
rupees.
कोई बात
Then sir,
नहीं, कोई तो what is your logic of 60? Number
the
one,
logic ये जो बात
in your
की
Umar 1 second. Number one, in your opinion, firm should pay 60% dividend. Is that right?
yes.
According to you, we are discussing growing firm. Is there anyone who is for 80% or 20%? See, you have to apply your mind. I can explain all the answers immediately. Otherwise, the understanding will not be correct. Just one more clue, one more, some idea so that you can come up with the correct answer. Let us say there are 48 shareholders, right? The number of students, so number of participants in today's meeting 45. Do you think that the requirements, financial needs, or financial state of affairs of every one of those 45 will be the same?
No, sir.
No, very true. It is just a coincidence that these 45 belong to same category, age-wise, gender-wise. Not gender-wise, age-wise, financial needs-wise, the financial status-wise, more or less they belong to the same category. It is not the case with it is not the case when it comes to the reality in a company. Shareholders, everyone belongs to a diverse category. When I say diverse category, I mean some of them could be working class. Within working class, some of them could be drawing a salary of rupees, let us say 5 lakh per month. Some 4 lakh, some 3 lakh, some maybe even 50,000 per month. Am I right?
Yes, sir.
Okay, when it comes to the class of income. Second, some of them may be having more than one source of income also. Maybe both husband and wives are working, may have their additional property which they have let out on rent. Maybe likewise, the individuals will differ drastically. There will be some whose bread and butter will be only investment, dividend, appreciation, and so on. They are neither working in private or public sector. They have no business, nothing. Their main 100% full-time job is buying and selling, investing in the company, making money out of that, and with that money, carrying on their day-to-day expenses. Isn't it? There will be several types also.
Yes,
Yes,
sir.
sir.
Okay. Then what will happen? Now I'm providing you the answer for all the firms, starting with growing firms. Then what will happen? If company pays 100% and it meets the expectations of those who are expecting 100%, they will stay. If company pays 60%, like Apak said or somebody said, so all those people belonging to the category of expecting 60% will be happy, will stay. And if they were expecting more, then what they will do? They will sell and invest somewhere else so that their expectations are met. And those whose expectations are met by buying will buy. And company under no circumstances will suffer. What will happen? Only the form of shareholders will change. Only the wise shareholders holding total number, everything will remain unchanged. Everything will remain the same. And as a result of buying and selling, the prices will either go up or come down. In case of a declining firm, there will not be much of an issue. Why not much of an issue? Because people in any case, there will be in any case buyers. Now come to the declining company. Growing is over. Come to declining company.
Sir, I have a question.
Yes, sure, go ahead.
Sir, let's suppose a person expect 20% dividend payout, but
Hold on. Which firm are you talking about?
it's a growing firm.
Correct. So then better to say if an investor who is holding shares in a growing firm expects 20%. Correct.
Yes. But sir, the company is not paying any dividend for multiple years. So
Correct.
is it necessary for an investor to sell his entire holding?
Again, your answer lies in just what I have said just maybe 10 seconds before. Answer to your question lies in what I have just said 30 seconds before. There will be a category of shareholders who will be happy because you have assumed to be an investor in a growing company. So we are only talking about with reference to a growing company. So there will be several people in this company, in a growing company, who will be happy even if 0% dividend is paid. Why? Because they will belong to a category wherein this is their second source of income, number one. Number two, they may not be wanting this income immediately in near future. They have sufficient financial, independency from either they are salaried people, they are business class people, they have got several other sources of income which are sufficient for their daily consumption or monthly consumption. So if they think that there lies a good future, if their earnings remains in the same company, will grow much faster than if these earnings are paid to them. So they will be happy even if zero dividend is paid. As against those category of shareholders whose bread and butter is dividend only. So they will be less bothered about future growth, future appreciation as much as they will be more bothered about receiving current dividend. Am I clear now?
Yes, sir. I'm just saying they can sell partial investment for dividend income.
Yes, that is where you have answered your own question.
Yes.
Partial. That means somewhere between 20 and 40, somewhere between 40 and 60, somewhere between 20 and 80, somewhere between 20 and 100, whatever it does, it will be able to satisfy those group of people who are expecting either 20 or 40 or 60. And company in no case will suffer because its R is greater than K. Is this clear
Yes, sir.
now?
Got it. Yes, sir. Thank
Now
you.
now come to declining firm. I'll take normal firm a bit later. Come to declining firm. Assume that you are a shareholder in declining firm. What would be your expectation? What you would like company to do?
Sir, paid 100% dividend.
Should pay 100%. Is there anyone who will say that company should not pay 100%? Okay, what is the reason for your expectation to for the company to pay you 100%?
Sir, company is generating less than the desired in return. So we
Okay.
can reinvest. Company can pay out dividend and investor can reinvest somewhere else.
Okay. Any other logic with any other answer? Anyone? Just anyone who is for not paying 100% dividend. Again, we are referring to only declining firm. Is there anyone who still feels that declining firm also should not pay 100%? Still, the answer can be correct under certain assumptions. What are the assumptions? If the investors feels that the company belongs to a category wherein future seems good. Currently, it is not able to generate, but the business model with which it has started is definitely or will definitely bounce back, will definitely grow in future. So they can take some calculated risk and continue to stay. However, it is based on several assumptions, one or two of which I have shared with you. And coming to normal, we started with normal. Some of you were saying it can, some of you were saying it cannot. Then you can apply the concept of KR and KE. KR and
KE, cost of equity.
KE, yes, cost of equity and cost of return earning. And applying the concept of cost of equity and cost of return earning, what will be the recommendation? It should not pay, because if it pays, the dividend that you receive will be taxable and you will be left with lesser money to invest. Is that clear? Okay. Now, just one before I move on to the theoretical part of it, one last question. Look at the rate at which the share prices are decreasing in case of growing firm. 100. Okay, if we go to from 100, if we go to bottom up, 100, 110, 120, 130, 140. Look at the declining firm. What is the difference between these two? This one, 84 and 88, 88 and 92, 92 and 96, 96 and 100. What is the difference between these two? At each step, 4. And what is the difference between each steps in case of growing?
10.
10. So mathematically difference is clear to all of you?
Yes, sir.
Yes.
Okay. Got it now? What is the reason for this? What is the reason for this? In one case, the difference at each step is 4. In other case, the difference at each step is 10. Isn't it mathematically you are clear? Can you point out the reasons? If not, take your time and point it out later.
Linear
Sir,
relationship.
the difference between R and K is 5 in first case, and just double is the difference in the ratio, and similarly the difference in R and K is 2, and double the difference in the declining.
Okay, you got it right. Difference between declining and growing, R and K. Here, what was the margin? 5%. Here, what
Yes.
is the margin? Negative margin?
2%.
2%.
2%. R is 10 and K is, sorry, R is 8 and K is
10.
10.
10. Here, R was
15.
15.
15 and K was
10.
10.
10. Because of this margin, these figures differ. Correct. Now we move on to some of the theoretical considerations, and those theoretical considerations are before assumption. There are just some assumptions of Walter's model which I wrote somewhere. Yes, assumptions. These assumptions are Walter's model's assumption. If you look at these assumptions, only then whatever calculations you have said and we have discussed will be true, otherwise not. Number one, the investment of the firms are financed through retained earnings only, and the firm does not use external sources. If the firm is using a combination of equity and debt, then the calculations will not hold good. Is that fine to assume? Second assumption is that internal rate of return and cost of capital of the firms are constant. This too, if not assumed, then our calculations will be incorrect. And when calculation, I'm not saying incorrect, rather the calculations and the decision will not be. Third, earning and dividends do not change while determining the value. And the firm has a very long life. In the short run, it will not do, only in the long run. So these are some of the assumptions based on which Walter has worked out and recommended. Nevertheless, it shows, it provides some guidance to the investors, also some guidance to the company about the retaining money and paying. Now we come to the this one criticism or the critical analysis of this model. Criticism basically stems from the assumptions. We assumed that the firms finances only through retained earning, but in practice, a project is not financed entirely from retained earning. At times, it is possible. There are several companies which usually finance their project using internal sources only, but the firms do raise funds through external financing. And when we say external financing, it includes the debt also. It includes debt. It includes, they come up with a specific permutations and a combination. So this is one of the criticism. Second one, the internal rate of return also does not remain constant. Internal rate of return we have assumed is 15. Any for the theoretical consideration, anything can be assumed, but for each year throughout the life of a project, the IRR does not remain constant. And also the limitations with which IRR suffers will also be applicable here. Can you recall those limitations? Yes, number one, we have to reinvest. And number two, more importantly, the reinvestment assumption. And third, the risk class of companies also keep changing. The class to which company belongs, the risk throughout the life of project does not remain constant. The assumption that cost of capital will remain constant also does not hold good, because as a firm's risk pattern does not remain constant, so naturally when the risk changes, KE should also change. Do you agree with this statement? When the risk changes, KE should change or not? As the risk increases, KE also increases or decreases?
Increases.
Naturally, KE will also increase. When you deposit in a bank carrying fixed return, there is no risk, except in exceptional circumstances where the bank goes bankrupt, some private like PMC case recently or something of that category. But usually in overwhelming majority cases, it does not happen. So you buy government security, you buy a bond, you buy RBI bond, you buy any public sector bond. So your risk is almost as good as nil. But it does not happen in case of equity. Therefore, When risk changes, KE also changes. Therefore, the assumption that IRR and KE will remain constant over a period of time does not hold good. So these are the criticism. If you look at the assumptions and criticism together, you need to just remember only one. Naturally, criticism are by and large based on the assumptions. Having said about the criticism or having said about the assumptions, still it provides some theoretical background for the discussion based on which a firm can decide to pay or not to pay, and if it decides to pay, then how much to pay. So this in brief clears our discussion or completes our discussion on relevancy theory of dividend, and within relevancy theory, Walters model, and within Walters model, 3 categories of firm. Up to this stage, if you have any question, you may please ask. Any question up to this stage? All right. Although it is about still a week to go, and by that time most of you will be able to join your organizations, because I have to engage 2 classes in a week, and according to timetable, I have been given two sessions on the same day. Does this arrangement will have another 4 or 5 classes, not more than that, perhaps? What is the last date of your summer training? You have any idea when you are required to return or come back?
So it's for a period of 6 weeks, so probably somewhere in mid-August.
From 6 to 8 weeks.
I'm trying to work out how many maximum sessions can I have. Accordingly, I'll plan the timetable and the text. So there'll be about 5 more sessions, 5 more days we can meet, 5 more Tuesdays, isn't it? Okay, 5. So that means I'll plan the classes accordingly. Once we are through with the dividend decisions, I'll come back to all the units wherein I left a lot of material which was to be discussed theoretically. So let me assume that we have 5 more Tuesdays. On each Tuesday, 2 sessions. Is that fine?
Yes, sir.
Yes, sir.
10th August, because even if we miss one, it will be a matter of two sessions. So I'll look at the calendar and accordingly plan. In the meantime, those of you who are who have decided to go for summer training in finance, I'll be posting this message in the group. So whatever project is assigned to you and wherever you feel in the project need my help, just discuss with me over phone or text or through email. I should be able to help you out understanding the concepts or whatever a job is assigned to you. So you will be in a better position to prepare your report and also to convince the people under whose this supervision you will be working. You can share a project that you are likely to be assigned. If it is routine on the job training, then there's no problem. But if it is specific to finance, any specific work is given, so you think over that work and share with me in case you need some help. With this,
Thank you so much.
yes, still you have any question you can ask. If not, then we can close the class and we still have the complete 1 week for any change or something, and we will, if nothing, no changes are announced, then I think this scheme will work from 7:45 to
9:50.
just like this, like we have today. We had today.
Yes, sir. Yes, sir.
If there are no questions, you may leave the meeting now.
Thank you
Thank
so
you,
much,
sir.
sir.
Thank you.
Thank you, sir.
Thank you, sir.
Thank you.